let's look at another example calculating marginal tax. So here we're actually using the rates that were for the 2018 federal income tax brackets. So paying taxes, if you paid your taxes in April 2019, these were the brackets that you would have used. Now we have two sets here. We have the tax rates depending on whether you are filing single or married, filing jointly. So we're talking about a couple, 2018. They had a total income, a taxable income of $90,000. They do have two children, and so we can actually consider the $1,000 per child tax credit. So once we calculate their total amount of tax due, we can take away $1,000 for each child. But first we got to just calculate what's their taxable income. And that's what we're going to do right here. We're going to use these marginal tax brackets. Marginal meaning for every dollar earned in that bracket. We're going to calculate the amount of tax that this couple owes before doing any tax calculations or tax credits. And then we're going to consider what's that average tax rate that they paid. So this is the column that I'm going to use. They're filing jointly. So this is what we're going to consider. They're filing jointly. We need to consider their taxable income of $90,000. And if you watched my previous video, what I like to do is just to think about a number line. Let's just assume that's a straight line. And here is $0. And their amount of money that they made in that year was $90,000. And I want to think about their salary and break it up based on these brackets. So they will need to pay 10% of their income for everything up to $19,050. So from 0 up to $19,050. So here's $19,050. They will have to pay a tax rate of 10%. So whatever amount of money that's in there, they'll pay 10%. Then from $19,050, every dollar then up to $77,400, which is a pretty big window there. So here's $77,400. For every dollar that's within that window, every dollar that they've earned in there, they'll have to pay 12%. So this is the 12% window. And then for every dollar earned, if we look at the next bracket, 77,000 up to 165. Well, they only made 90, so this is going to account for every dollar earned in this group. So every dollar that they earned in this bracket, they're going to have to pay 22%. So now what we want to do is just to think about how many dollars are within and did they earn in those windows. So from 0 to $19,050, well, that's just $19,000 and $19,050. Now, in here, we have to think about the difference. We have $77,400 minus $19,050. And if we find that difference, that's how many dollars are within that window or that interval, if you want to say it that way. So within those two numbers, what we have is $58,350. So there is $58,350 of their income that's being charged at a rate of 12%. And then finally, we have this last bracket here between $77,000 for every dollar earned within $77,400 and their maximum taxable income of $90,000. Let's find that difference. How many dollars are in there? If we find that difference, we should get $12,600. So this is $12,600. So that means $12,600 of their income is going to be charged at a rate of 22%. And so now that's what I'm going to do. I'm going to find 10% of, what is 10% of $19,050, which I know is just 0.10 times that amount. And what we should get is that this is $1,905. So that means they need to pay $1,905 in taxes for the first $19,050. Next, they made $58,350 within this next bracket, so they need to pay 12% of that. So if I multiply 12% times that amount, let's see what we get. I got $7,002. So that means they need to pay $7,002 for that next $58,350 that they make. And now they need to pay 22% of the amount of money that they earned within the next bracket. And they earned $12,000 or $12,600. So if we take 22% of that, let's see what we get. We have $12,600 in that window times 0.22, $2,772. So they need to pay $2,772 in tax. So their total amount of tax due, if we add all these numbers up, so I'm going to add $1,905, $7,002, and $2,772. Let's see what we get. I got $11,000, $11,679. So that's how much tax that they owe. They owe $11,679. Out of, if we want to find the average amount that they paid, we're going to take that amount and divide by their taxable income. So $11,679, let's divide that by how much their taxable income was. So that's out of $90,000. So if we take $11,679 out of or divided by 90,000, this is approximately, and let's write this out a little bit. So 0.12977 if I round out a couple places. So this is about 12.977%. So this is about 13%. Again, rounding here, there's no rounding rule. You might want to round to the nearest whole number or the 10th. You'll want to, on your homework, look for some guidance on how to round it. But here, if I wanted to round it to the nearest thousandth of a percent, I get 12.977%. So that's their average tax rate that they paid. The next problem now asks us to consider if we can remove $1,000 per child, then how much is their tax that they now need to pay? So they previously owed $11,679. They have 2 children. And we know that there is a $1,000, and this was for 2018. This may change depending on what year you're watching this video. But $1,000 per child. So that means if we multiply by their 2 children, they actually can reduce their tax by $2,000. So that's pretty good. We can take their $2,000. That's how much they can take away from the amount of tax owed, because this is a credit. This is a little bit different than a deduction at the beginning. This is just pure tax that they can take off. So we can subtract $2,000 from what they were to owe, and we get $9,679. So now that is their new amount of tax owed. Now, this $2,000, this is actually, if we want to use from this week, if we want to talk about the phrases absolute and relative, we know that the absolute change is just thinking about what their previous amount was and their new amount. So their previous amount was $11,679. Their new amount is $9,679. So what we know here is that the absolute change, there we go. The absolute change is just $2,000. They had a $2,000 reduction. Now, the relative change, we always want to consider what was the change, and let's divide that by the initial or the original value. So if we think about the relative or the percent change, we can think about what was the change over, and I'm going to zoom out there a little bit, there we go, change over the initial or the original amount. And so the relative change, we know that they had a reduction of $2,000 over the initial amount, which was $11,679. And so if we put that into the calculator, we get a decimal that we can convert into a percent. So this is approximately, and I'm going to write this out a little bit, 0.17124, and this goes on. So I'm going to stop there. And if I turn that into a percent and round maybe to the nearest thousandth, I have 17.125%. Again, this is approximate. Rounding is something that you can take into consideration, what you think might be most appropriate, or follow the rounding guidelines that are provided for you on the homework problems or on a quiz problem. But what we have is that this couple was able to reduce their amount due by $2,000. That's the absolute change. And the relative change, this was a reduction of about 17.125%. So this was a reduction or reduced their taxable, what they owed in taxes by 17.125%.